Welcome to TradeTheNBI.com. This is John. This report is for the 18th. Well, Friday, it was an interesting one as, the realization with the auto worker strike and some of the other headwinds caused a bit of selling that once it began, it really started to amplify, move the NBI Magenta from a clear buy all the way down into sell mode, and short interest shot up significantly. Still, from a DOC though, little contrarian here as you have the DOC green over cyan, which means that buyers still have enough to keep things in order, and in a broader sense, literally just in the same consolidation zone. Not a whole lot's changed, and that's the strength of that NBI Gold, keeping things. It was just enough to clear out quite a few stops, and that just poses a lot of different opportunities. But when you have this kind of mixed confluence, I think you just get a lot of back and forth. And so I think that some of that's got to get worked out first. But the stronger this NBI white move, particularly if it gets above that 25, is certainly going to have impact. And the fact that we moved back to negative shakeout makes it much more difficult to see any kind of significant rally at this particular stage. When we look at it from a treasury standpoint, yield continuing to rise, that is definitely a result of oil and no change there. And the worse this gets, the more problematic it becomes because you have a two-factor. You have the appreciation the market needs to do because of the devaluation situation, as well as the fact that Fed can't stop because this is a whole new round of price increases that's going to hit the market going forward. And people will feel it immediately, obviously, at the pump, but that will be spread out over time throughout just about every other product there is. Um, we know what this means for the euros. It was very problematic. We've talked about it for quite some time, and no relief in sight there. And the ECB really can't do anything about it at this particular stage. Yeah, sometimes the charts, who knows? Bitcoin, from its standpoint, obviously getting some elevation. I think we'll see that throughout crypto space as it builds a little bit. Doesn't mean that it's out of the woods. It's a big improvement from a Bitcoin standpoint, from a checkout reading here, almost moving to the positive side. And that would be significant, particularly moving over the 23%. Where it's a little more difficult is ETH, quite a bit behind and still not looking so hot from a shakeout standpoint. Makes it very difficult to see a move. So you'd have to see a strong Bitcoin performance probably to help lift other cryptos at this particular stage. Not a lot of enthusiasm there. From an ES50K standpoint, you can see the selling started right at the beginning. Was their early telltale signs. Beautiful DOC spread here where cyan spikes above the red DOC, and then you get the complete cave. You had the short-term buyers with the potential to hold things. They held the line right around the 50%, but once that orange gets caught between the cyan and red, that's a continuation move and stayed there. We're seeing a little bit of a turnaround right at the beginning here, but you've got a pretty negative shakeout that's going to have to ease itself back off and probably fight the 23, come back again, and form another push to go to the upside of it. So pretty clean from that standpoint overall. When we flip over to a 5K, you can see in the pre-market, we're up at the peak elements of it. They keep testing the lower bounds. If we go back and look at what the day looked like from a 5-minute chart here, that was pretty clean. Early on, it was just a little bit of back and forth, but right as we got towards the open from the pre-market, it just was a complete cave, filled in that previous positive extreme marker that we had right there, and did not stop at the end of the day. So it was all fairly clean. I don't think that we're in any major trauma at this particular stage. I think there's just some recognition that there's a little more headwinds than the market was hoping for, and that oil situation certainly is going to exacerbate that and make it much more complicated. The fact that treasury yields continue to rise just means that you have alternative approaches, but of course that gets eroded if oil continues as it is. All those players searching for that yield, they're going to still be behind the curve because rates are going to have to increase anyway. But it certainly dashes any hopes the market has of a quick Fed stop or abatement, and that really becomes a driving factor because if the Fed's going to continue to put pressure, it really messes with a lot of things because if the Fed continues to raise rates, budget, all of these things just turn into utter disaster mode. So how they're going to resolve that, I think, is really something that's going to start to weigh on the market, particularly as you head into an election uh, cycle. So it's going to be in for an interesting fall beginning, and I think that we're going to have a lot of dynamic fireworks. Uh, both directions, because when too many people are convinced of one direction, that's when we usually get counterplays. And as I've always said, it's not about the psychology of the broader individual that moves the market. It's a decision that the bigger players really start the wave, and once that begins, there you go. And the perfect situation with this is would not be shocking to see a little bit of a fade to get people believing that, and then the big players jumping in to really drive price higher as a counter rally, particularly as a hedge against the inflation situation. Just depends on how fast or if there's a significant stop in the economy. And strikes, those kinds of things can have that impact. And so that is definitely going to be uh, a counterbalance to it. So we're just going to have to continue to follow the readings and go with what is. As always, though, continue to look for me on the Skype chat. Trade well. We'll talk to you later.